Hello, everyone. This is Tim Melvin of the Tim Melvin Deep Value Report and the Banking on Profits newsletter, coming from you on a Sunday afternoon down here in what is just an absolutely gorgeous September day in Central Florida. Um, it's kind of a week. Prices were down a little bit during the week. We had about a 1% loss in the S&P 500. The All World Earth Index is down 1.06%. And our index of small bank stocks that we travel, the QABEA ETF, bucked the trend, was up about 1.34% for the week. A little better economic news this week. Retail sales was an okay number. Consumer sentiment was actually up on the week. So people are feeling a little bit better about themselves, and they're breaking out their wallet now that we're into kind of the normal season after Labor Day. Probably a little bit of back to school shopping still being done out there. Um, we did see jobless claims raise just a little bit in the week. Now, on the heels of that absolutely disastrous payroll report a little earlier in the month, that could be a cause for concern. Most people are still dismissing both of those as kind of a one off anomaly. I'm not quite sure, but the last thing this economy needs right now is any indication of even weaker job growth. The little bit of growth that we have is not great, and it is really concentrated in a lot of part-time and lower-paying jobs. That's the one trend that we're really looking at and saying that's got to turn around for things to get a whole lot better in the U.S. economy. So let's hope that trend does not continue. Now, there was enough strength in the economy this week that the bond market was like, oh, let's just back off a little bit here, fellas. We did see the TLT bond ETF fall by a little bit over 2% this week. Bond market's nervous about higher rates, and any indication that the Fed may cut rates sooner rather than later is going to create a little selling in the bond market. First serious selling we've seen in a little bit. We'll be keeping an eye on that because obviously higher interest rates are going to be a real problem for corporate America and the U.S. economy. Another little round of good news. Oil prices are down, closed at 98 for the week, so down under $100. Real mixed outlook from all the analysts and folks that follow oil. I'm not smart enough to tell you where oil's going to go. I am smart enough to tell you that the lower oil prices is creating some serious opportunities in some of the oil drilling stocks. These things are now trading, a lot of them below 75% of tangible book value, in spite of the fact they pay good dividends, they have good business, and a great mix of assets. So we've been adding a little bit of that to the portfolio over the last couple of weeks. 70 to 75% assets, they're just too cheap not to own at that kind of discount to book level. Just not a lot to talk about this week. I just came home this morning and we got the reading list, and normally go out on Saturday. They went out on Sunday this week because the wife and I were away for our little anniversary trip, and not a lot on the reading list. They were much shorter than normal. It's just not a lot going on from a value investor's point of view. Now, some of what was going on was significant. For instance, the Third Avenue letter was out and widely available around the web. And real interesting letter this month. You should go to thirdavenuefunds.com and read it when you get a chance. And Marty Whitman talks about Third Avenue's been doing a little bit of back testing of stocks, and the results are in the letter. And it's going to come as no surprise to you that he's testing stuff trading below book value and with sound balance sheets. And what he finds is over time, those stocks do really well compared to other stocks and the broader market itself. That's not really a shocker to us. We kind of base our entire life and career on that simple fact. He also talks about buying sound financial institutions, smaller regional banks, at a discount to net asset value. And shockingly, once again, he finds out that, hey, that works pretty well. We've known that for years. I've been involved in the small community banks for well over 25 years now. And we keep talking about this tremendous trade of the decade opportunity. And last week, I had a chance to interview the CEO and CFO of Home Trust Bank Shares down in Asheville, North Carolina. Exceptionally well-run bank. The interview transcript will be out on benzinga.com, hopefully sometime this week. But a lot of you guys, I sent a copy of this link to. The CEO and the CFO both make a tremendous case for the fact that regulation has created opportunity for them to expand their bank by buying even smaller banks, because the regulations are so costly and so strict. These smaller banks simply cannot afford to stay independent. This is kind of a second opinion from two guys with years and years and years. The CEO's been in banking for 39 years now. He's kind of seen everything come and go, and he's verifying the fact small banks pretty much have to sell. This is an incredible opportunity. The small banks are going to get taken over. You'll get some like Home Trust that make very smart acquisitions and are able to grow their assets and earnings along the way. And even with those banks as they grow, it's not going to be a shock to see a bigger regional come in and buy them at an incredibly attractive price. If you're not in the trade of the decade, you need to ask yourself why not. Even if you're a short-term trader trading tick by tick by tick by tick, or you're a total growth stock guy, in the mode of say my good friend Louis Navalier, who by the way has been buying community banks of late, um, you need to be in these stocks. Okay. Now, we offer two services. One's the VIP Banking on Profits monthly service, which has a guided portfolio, and we do a little bit more in depth analysis and personal opinion, my personal opinion on banks. And I tell you kind of what to buy and sell in that portfolio based on my 25 years of experience and what I see happening in the banking market. But then we have the Banking on Profit monthly service that we just introduced. That's kind of a statistical overview of what's going on in the banking world, where the cheap stocks are, which ones have the high return on assets, who's buying back stock, where they're raising dividends, where insiders are buying, and which ones the institutions have been buying. In fact, we just did the 13F issue. That's going to be posted tomorrow, or heads will roll Tuesday at the latest. It should be up tomorrow on the website, the new newsletter edition. Now, we bought that out with an eye on selling it at $99 a year, and the marketing people, as always, said, "Hey, look, we got to do an introductory deal." Oh, okay. I try to stay out of the marketing and all that. I don't want to do it. I pick stocks and write stuff. That's what I do. So we've been offering that thing at $47, and I've kind of let it go on for 2 months now, and I'm here to tell you that end of next week, that's it. The introductory offer is going to go away, and I have promised everybody at MarketFi and that I've talked to, I will never sell this newsletter this cheap again. This thing probably takes 20 to 25 hours a week to put together. There's probably over $1,200 worth of services and databases that I subscribe to on an annual basis. Um, to put the information together for you, and we're going to sell it to you for less than $100 so you can get all that information. I think that's a pretty good deal. At $47, it's an unbelievable deal. It's like till next Friday, and then the introductory offer is killed. Okay, so if you want to get involved with this, and I really suggest that you do get some exposure to this sector, take advantage of the Banking on Profits monthly service for just $47. Now, of course, if you have the VIP service, you get it for free because we don't do add-on sales when you have a VIP product. We give you everything else that we do free in the future. Okay, now let me give you the Value Guys travel tip of the year. We went away for the fourth wedding anniversary this week. It was a fantastic trip. We went to Sanibel Island, which is a beautiful spot. If you've never been there, it's next to Isla Morada. It's probably my second favorite spot in the world. It's just a gorgeous, gorgeous island. Lots of fine dining, very nice beaches, some great drinking establishments that I have been known to wander into. It's a great town, and what I tell everybody about it is you've got the beaches, you've got the scenery, and this is a town where they have more bookstores than 7-Elevens. That's my kind of town, folks. What we did not know until we got down there this week was that Sanibel and Captiva shut down after Labor Day, and then they all start trickling back like the last week of September. A lot of the restaurants were closed, and that was okay. That was a little bit unfortunate, but we still found plenty of great places to eat. We even found one we probably would not have ventured down to unless everything else in town was closed. We went to the Sunset Grill, which is right up near the line there at Captiva, right before you cross over the little bridge. It was spectacular. Carlos, our servers, clearly a professional, been doing it a long time, made some excellent recommendations. It was a 5-star experience and a 5-star meal. So check that place out if you happen to go. But here's what happens in Sanibel. There's no lines. We went into the Island Cow for breakfast this morning. That's usually about a half an hour line on a Sunday morning. Walked right in, sat down. It was great. Same thing with the Sanibel Grill. I was able to grab seats at the bar at 9 o'clock at night at the Doc Fords in both Sanibel and Captiva. And I don't think I've ever been able to walk in and just sit right down at the bar. It's usually pretty crowded. The locals are real fond of the Doc Ford places, apparently. But anyway, Sanibel, from after Labor Day weekend and Captiva, Up to about that third week, it's cheap and it's not crowded. There was no traffic. There was no lines at the restaurants. The stores were not crowded. The beaches were not crowded. It was just a wonderful experience. Prices dropped for a lot of the hotels. The really good news is the tiki bars. We checked this out. We did a very thorough investigation Saturday afternoon. All the tiki bars along the Gulf, they were all open. So I'm pleased to report that. But if you're looking for a little less costly way to go to one of the prettiest spots on earth, Sanibel, those first 3 weeks of September, check it out. Okay, sports, Orioles and Yankees. Orioles took care of the Yankees Friday, winning two. Unfortunately, the Yankees came back on Saturday and snuck one away from us. We're going to play them again tonight. Our magic number is now down to 5. So if we can win this game tonight, it goes down to 3, and the division title is pretty much, I don't want to say in the bag. I've seen worse collapses, but we're pretty close to making this happen. I'm pretty excited about that. The real races this year, the Central Division and the wild card race in the American League are about, that's all real close. There's like 6 teams that could conceivably win that wild card, and the Royals and Tigers are just trading back and forth. They have one more series against each other in Kansas City, and I think that will decide that division pretty much. The NL Central is still really close, unfortunately. Milwaukee, you got to get it together. I want to see Hank, the Wonder Dog, even if he has to come in as a wild card. They're 5 back in the division, so that's getting a little dicey. They still got an outside shot at a wild card. So come on, Brewers, let's pick it up over there and get into that. The actual race itself is pretty close between Pittsburgh and the St. Louis Cardinals. And the race in the West is still very, very close, and they also have a tight wild card. There's some great pennant baseball this month, folks. If you're a baseball fan, there's going to be some fantastic games coming down the line. Of course, I've got MLB TV. I watch them on my phone and my computer and everything else. But there'll be some great games just on the regular networks and MLB cable network as well. It's a great time to be a baseball fan. Football, of course, is upon us. Navy won yesterday. Looked pretty good doing it. Notre Dame looked okay against Purdue. Florida won, my adopted Florida Gators. They did win. They did not win in quite as spectacular a fashion as fans might have liked. But, they were playing Kentucky, an SEC team, and that Kentucky team's better than I've seen it in a long, long time. They won. It was a good football game, but they better pick up the pace because the real heart of the SEC is coming up for the Florida Gators. Be interesting to see. Of course, this week in the NFL, it's left a bad taste in everybody's mouth. I'm having a hard time getting worked up about the NFL football. Just all the accusations, the problems that have come out of that league have just been kind of nasty this week. My Ravens did win Thursday night, convincingly beating Pittsburgh. There are some very strange football games in the first set of games going on today. So I think we're going to see parity and balance in the NFL again, and I'm just never sure how much I like that. I like dynasty teams. But we shall see. And I suspect that their audience is going to take a pretty big hit if that league does not clean up its act pretty quickly. There was just some horrible news about the sport this week, and I don't think the league reacted very well, in my opinion. Anyway, it is a fantastic book week again. It just goes on and on and on. This one's not quite as good as some the past few. It's certainly what's coming up in the last week, and then into October, November is just mind-blowing, the number of books coming out. But the third book of the Century Trilogy by Ken Follett's coming out. It's been an okay series, and not one of my favorites. I'll probably read it when it comes out in paperback. It's an airplane book, possibly. Sandra Brown, who always just writes a solid, entertaining book, is coming out with one called Mean Streak. Jonathan Kellerman has a new one coming out that appears to have a little bit of a paranormal aspect to it. That might be pretty exciting because Kellerman is a good writer who tells a good story. Carl Hyacin brings back Skink, the swamp-living hallucinatory toad-licking ex-governor of the state of Florida who lives primarily on roadkill and is one of the best characters in the history of what I call Florida mystery literature. Okay, anything Carl Hyacin writes is absolutely worth reading. The guy's fantastic, very funny, very insightful writer. So without a doubt, I will be picking that up. And on the nonfiction side, Peter Thiel's new book on startups will be out. He's a smart guy. That could actually be a worthwhile read. So I'll probably be picking that up at some point, downloading it on the old Kindle this week as well. Now, for investors, we have a potentially huge week coming up. We have the Fed meeting. Okay, that's always, they're going to come out with their announcements. Don't think you'll see a lot of change, certainly not in interest rate directions or language. I think it's too preliminary for them to really toughen up their language, but I can be wrong. So maybe that's a real market moving event. The real market mover is Janet Yellen's press conference, because she's just going to get blistered by questions. They really try to put her on the spot. She's reacted not so well in the first one, a little bit better in the second one. We'll see how she handles it this time around. But the press conference can certainly be a market mover, because they're really going to be pushing for a little more guidance on when interest rates are going to start moving higher. If she gives any indication of sooner rather than later, the market may not take that very well. Oracle is out with their earnings. They're always a really good insight into what's going on in tech spending, because they're just such a huge company and they do business with so many of America's largest companies. So their earnings can give us a little insight into the tech economy. The Alibaba IPO. I did not try to get shares. Nor would I have gotten any if I applied. I'm not exactly an IPO maven over here. But it's going to generate a lot of interest. And again, if it goes higher, it does well. It probably takes the market higher with it. It's going to suck an enormous amount of demand out of the market. This is a huge IPO. If this thing should break below the IPO price in the first day or two of trading, that's going to be a huge tell and a big problem for the stock market. So we'll see again later this week exactly how that plays out. Now, something we haven't really given too much thought to until now, it's just been kind of over here. You're aware that there was a Scottish independence movement and a vote coming up pretty quick, but you didn't put, it's Scotland. It's didn't look like it was going to happen for a long time. It's going to happen. There are market moving implications, believe it or not. We've had several of the larger banks, including Lloyd's and Royal Bank of Scotland, that have said, we're leaving. Because we just can't do business from here if we're not part of the United Kingdom. You've had the Eurozone has said, hey, you're not a signatory to the treaty, so if you go independent, you are not automatically a member of the Eurozone. That is a huge negative for Scotland, because now they're going to have to negotiate their way in, and they have no real central bank or currency. They're still planning to try to use England's, and I'm just not quite sure how that's going to work and be an autonomous nation. But this vote is really close. You've got North Sea oil involved. You've got a tremendous leftist sentiment in Scotland. So what happens to those oil resources and where that money is going to flow now is going to be a huge question. There's some serious implications to this. We're going to have to watch it closely, see how it plays out, and if it is a fact, a yes vote, and Scotland splits off, there's market moving implications all across the European zone, and certainly at home in the United States. Everything that happens anywhere else in the world is eventually going to filter back into our market, unfortunately. We've got Moody's review of Britain and France. Now, on Britain, what are they going to say? Well, you got to tell us what Scotland's going to do. We'll tell you how Britain is. And France, there's only one answer. It's horrible. The unemployment rate is nasty. The GDP is not growing. No matter what the government says, people I talk to over there tell me France is, in fact, in a recession. Unemployment remains sky high, and they've just lagged well below even the very slow growth of the rest of the region. So I think that'll be Moody's kind of outlook on that. Now, Paul Volcker is going to slip his leash later this week. He's going to give a speech at the Federal Reserve Bank of Dallas. That should be entertaining, because he is of an age now where he says what he thinks, and I don't think he thinks too much of the current central bank policy. So that could be a fun, interesting, maybe even a little market moving speech if he says something that really catches traders by surprise. And we're going to wrap it up with the G20 meeting in Australia next weekend. Probably not a lot there, but always potential for a bombshell, and of course always of interest in tracking the global economy. So that's what we have going on this week. Not a heck of a lot in this week past, potentially a whole bunch in the week coming up. So it's Sunday afternoon down here in Central Florida. It is a very nice day. There's a bunch of football games on. Got a couple new books I picked up at some of those Sanibel bookstores, so I'm going to read those. Enjoy the afternoon, and hope you guys do the same, and we'll talk to you next week.